Is everybody ready to kick off another awesome Power Lunch here at Office Centers? Woo! I know I am. I'm Lisa with Office Centers. Want to welcome all of you here at our Minnetonka location. So many familiar faces. Love it, and thank you. Also want to welcome everybody at our other 4 locations. And certainly remember that any questions that you have at other locations will be engaged, and will be telling Paul, and you will tell everybody what the question is, and then we'll answer.
Yes, we will try.
We will try to do that. Perfect. All right. Well, I'm really excited about this because Paul is one of our very favorite and valued virtual Office Centers clients. And believe me, how long has it been that you've been a client of ours?
A member? Been members since 2010. So coming up on 7-8 years. Yeah.
And we've had some opportunities to raise the roof at networking events.
We have.
And we did work too.
Yes, we have. Starting right off back in 2010.
You got it. So, we're so excited about your presentation today, but I'd love to have you have an opportunity to tell everybody a little bit about PEK Accounting and Consulting and, what you do for your clients.
Yes, well, thank you so much. PEK Accounting Consulting, we're a group of 3 consultants, and we've got several clients in the Southwest metro area. And we help our clients with their QuickBooks accounting, with their financial reporting, with their cash flow management. And so we like to, in Southwest metro, geographic location to our clients is very, very important. And this time of year, January, is probably the key time of year because you're closing the books for the prior year, reopening and getting started. So it's just a great time to talk about accounting. So great to be here.
Yeah, and we're thrilled to have you. One more question. How do you differentiate yourself from others in your industry?
Well, as I mentioned, we're an accounting consulting firm, and there is definitely other consulting firms. But I think what sets us apart is we like to work on site at our client offices. And we find that is very, very helpful to problem solving, education. So really, we become part of the team. And Office Centers works very, very well because of the virtual relationship and fits our business model. So working at clients, you can come here to work as needed. But I think working at side by side in the client office is really what brings us to another level.
Perfect. So one more question. Outside of the accounting world, what does Paul like to do?
Well, Paul, I love the 4 seasons of Minnesota. Love the snow, love the summer, of course. And I've got some family out in the Oregon and Washington area. I try to travel out there as much as possible as well. But love Minnesota. And
we love Paul. So everybody, please welcome him. We're in for an awesome presentation. Thank you.
Thank you so much. Okay, well, welcome everyone. We've got Will on the camera. Will, raise your hand. Wave to everybody.
Everybody.
Thanks, Will.
All right. Well, we've got about 45 minutes to an hour to be together, and we've got some handouts. We've got our PowerPoint. We've got some stand-up. We've got our whiteboard. And as Lisa mentioned, as questions come up, if you feel appropriate to ask the question, I'll definitely answer it here to everyone. And if anyone come in, how do they come in from the other centers?
I can see them right here on my computer.
Okay, so Will and I will team up on that as those questions come in. And then hopefully we'll have some time at the end for some questions as well. So everybody sound good?
Sounds good.
All right, great.
Ready to go?
Okay, well, we're going to start. This Power Lunch is on balance sheet business management. There was an email that went out very early on. So why don't we go to the next slide, Will, on that. And so our Power Lunch is about balance sheet business management. And this is the email that went out. And these are the 3 points that we're going to be talking about. What is balance sheet management? Steps in balance sheet management, and the 2 most significant benefits of balance sheet business management. And I thought what we do first is we're going to jump to the benefits, because I'd like you to think about some benefits as we go through the presentation. Maybe some come to mind as we get rolling. But before benefits, just want to check with everyone. Does everyone have the handouts? We've got a set of handouts. We've got four handouts. Has everyone got the handouts? Any word from the other centers, Will? Everybody raising their hand on the handouts?
Nothing yet.
Okay, so I think everybody got 4 handouts? So we're gonna walk through with these handouts. We're gonna walk through our PowerPoint slides as well. And so let's go to that 3rd slide, Will. Go to the next slide. There we go. So the year 2018, for everyone in this room and everyone at the Office Center's locations, 2018 is going to be a year of business challenges and business opportunities. This is very important to recognize, and how your business, maybe a sole proprietor, maybe a larger company, how you make decisions to walk through those challenges and walk through those opportunities is going to determine what your year is like. Are you going to have an okay year? Are you going to have a good year? Or are you going to have a great year? And we'd like to help you have a great year. And so that's what we're kicking off today with, talking about balance sheet business management. So I mentioned talking about the significant benefits of balance sheet business management. There's really 2 significant benefits. And those are, it prepares you for business challenges, first benefit. It prepares you for business opportunities, the second benefit. And so let's just look at what are business challenges and what are business opportunities, just examples. And maybe some of you have examples that come to mind. Business challenges are very real. One business challenge, what if a competitor starts calling your customers, starts offering their product at better price, better service? These are real issues, real challenge, competitor pressure. That's a very significant challenge. Second challenge is staffing. What if one of your key staff people leave your company? That key staff member could be in sales, they could be in operations, they could be in administration, and the loss of a key individual in your company could be devastating. So that is a very, very real challenge. Third challenge that I'll mention here, just as an example, is technology. And technology is always changing. And you've got computers. Are your computers up to date? Is your network up to date? Is your firewall up? Are you possibly going to have a cyber attack? We hear about those all the time. So these are very, very real challenges. And if you're not prepared for those challenges, it's going to be a tough year. But let's talk about benefits. And benefits, in a way, kind of the flip side of challenges. But let's look at benefits. One very, very significant benefit is, or one very significant business opportunity is, what if you get a phone call from a company that says, hey, we'd like to offer you a new product line. And that product line is going to complement your current product line, and you're going to be able to sell more product to your customer. That is a very, very significant business opportunity that you could that could come your way. Being prepared for those types of things is very, very important. Second opportunity relates to the staffing that I talked about in the challenge area. What if you had the opportunity to hire someone that came into your company that was a real rock star? And that rock star could be in sales, they could be in operations, they could be in administration. And that person's skills and abilities could take your company to the next level. This is a real business opportunity and what you want to be prepared for. Third opportunity is in the marketing area. You may have the opportunity to launch a marketing initiative. And that initiative could be in the area of website development, right, Dale?
Absolutely.
It could be in the area of an advertising program. It could be in the area of trade show. And engaging in those marketing initiatives could take your company to this next level. And so you want to be prepared for those opportunities. So challenges and opportunities are what balance sheet business management is all about. Does anyone have a challenge and opportunity that might come to mind? they want to share with the group here? Any?
How about acquiring a competitor?
Acquiring a competitor. That is a great opportunity. And being prepared for that, being financially prepared to have that come to your company, have that opportunity, and execute. That is
Or have the
awesome.
confidence
Have the
to
confidence.
be able to do it.
Yes, absolutely. Yes, Brett.
Just the roller coaster nature of a lot of businesses where peaks and valleys,
Yes.
and trying to figure out
Yes.
those challenges.
Oh, absolutely, absolutely. Well, this is what we're talking about. And this is 2018. Business challenges and business opportunities. This is what is going to be a common theme through our Power Lunch. So I think we're ready to move on. Move on in our Power Lunch. Let's go to the next slide, Will.
Hey there.
And we're going to talk about what is balance sheet business management. We're just about there, but I'd like to give a little bit of background first. And some of you here were at our business season kickoff. I see some hands raised, a couple, 3 hands. We had a business season kickoff in October. And that was the first time we presented balance sheet business management. And I shared that my background was in banking, was in small business, and then when we launched PEK Accounting Consulting in 2010, now we've got a group of clients. And one of our key tools that we use is cash flow, our cash flow template. And I'd like you to, let's take our first handout, which is page 1 of our handout. And we'd just like to look at that page 1, the cash flow handout. Everyone got that? And I'd just like to read this middle paragraph to you and share how that helped us with balance sheet business management. But knowing what the cash balance is expected to be is powerful information for managing the business. Whatever cycle the business is in, growth, seasonal, or stable, the expected cash balance gives management the information to make decisions for business success. So we looked at cash flow and looked at what we were doing. We were talking about how we were working with clients. And we realized this cash flow, we were interacting with other balance sheet accounts that are really core to the business. Led to the development of what we've termed balance sheet business management. So let's go to our second handout. Everyone turn to page 2 of our handout. And what we want to talk about first, before we actually get to what is balance sheet business management, we want to become familiar with the balance sheet. And we have a stand up here. I think how's that coming in over at the other offices? It's good?
Yep.
Okay. But we have a stand up here, and everyone here would like you to refer to the second handout. And this is what a balance sheet may look like with these accounts and these sections of the balance sheet. We have assets, we have liabilities, and then we have equity down in the lower left-hand corner, lower right-hand corner. And so being familiar with the balance sheet is very key to understanding balance sheet business management. So let's just look at the asset side, and I've got 3 accounts identified: cash, accounts receivable, and inventory. And those 3 accounts are what we call the core accounts of the asset side of the balance sheet. Let's move to liabilities. We have 2 accounts that are core liability accounts: accounts payable operating and accounts payable inventory. You might say, well, Paul, why are you separate? Why do you have 2 accounts payable accounts? And this is why. We separate those 2 accounts payable accounts because they have different types of financial obligations. And the accounts payable operating are things like utility bills, things like technology bills, things like marketing bills. We have insurance payments, and these are normal operating expenses of the business that you want to be able to track in a separate accounts payable operating account. The second accounts payable operating account that is just so critical to companies that have inventory is accounts payable inventory. And I've aligned that with the inventory on the asset side because the inventory financial obligations are tied to inventory purchases. And a business way of approaching things is when inventory is sold, those obligations under inventory, accounts payable inventory, are paid. That is a way to approach and think about that because you want to have the cash in hand to pay those financial obligations in the accounts payable inventory section. So that's why we separate that. And we're going to call these accounts 5 core accounts of balance sheet business management. This is important to recognize in our terminology. So now let's drop down to the equity section. And the question that might come in, I don't know if it maybe it's come in already, Will. Any questions coming in?
Not so far.
Okay. You might say, well, Paul, balance sheet business management, aren't you talking about the profit and loss statement? Isn't that part of this balance sheet business management? And my answer to that is, yes, it is. And we turn our attention to the equity section of the balance sheet to 2 accounts. And the one account, the first account, is retained earnings. And in that retained earnings account is all the prior year's activity, profit and loss statements. One number that's posted on the balance sheet. But that activity all resides in that account. Revenue minus costs and the profit is the number that's posted on the balance sheet. So we are talking about the profit and loss when we talk balance sheet business management. Right below it, net income, that is the current year profit and loss. So all that activity in the current year profit and loss statement is in that account. So here we are in January 2018. So you close your books on December 31st, 17, all years prior is in this account. Everything that starts to happen in January 18 is in this net income account. So we want to become familiar with just what does a balance sheet looks like and the accounts that are on the balance sheet. So anyone have any questions, comments on that so far? Everybody looking good? Okay, well, is it okay to leave this up?
Sure.
Okay on that, Will?
Yep.
Okay, good. Okay, well, I think we finally arrived at the point to define balance sheet business management. We're identified with the balance sheet. So balance sheet business management, and let's, here we go, we got a PowerPoint, that's great. It's an approach to daily decision making with the objective, the thinking objective, that you are going to improve that balance sheet. You are going to financially strengthen that balance sheet with those decisions. And that you are thinking about that when opportunities and challenges come your way. What are the options under challenges, options under opportunities? What are those selection of those options? What is that going to do to particular balance sheet accounts? This is what becomes very, very important in the execution of balance sheet business management. Yes?
So how often do you check your balance sheet? Is it like at the end of every single month, or is it quarterly, or how do most owners?
Most owners check their balance sheet once a month at the end of the month when they close their books. PEK consultants, Dan, how often do we check the balance sheet?
Cash every day.
Every day.
Inventory, depends upon how far your swings are.
Yeah.
But for sure, monthly.
Yeah.
But cash every day.
Cash every day. Accounts receivable, cash, inventory. We're going to talk more about that. But great question. I hope everybody heard that. But question was, how often do business owners check their balance sheet balances? And so, great question, great question. So, balance sheet business management has this objective. So now you say, how do we execute balance sheet business management? We've got 3 steps. Let's go to that next PowerPoint, Will. There's 3 steps to balance sheet business management. The 3 steps are financial communication, financial forecasting and comparison, and conversion. We're going to talk a little bit about each one. The first one, financial communication. Business owner and their management team sitting down at the conference table, talking about options to make decisions. The question is put on the table, how is this decision going to impact our balance sheet? We start to create a dialogue along those lines. Some questions to drill a little bit deeper that could be put on the table are, how is this decision going to impact inventory? How is this decision going to impact accounts receivable? How is this decision going to impact cash? How is this decision going to impact one or both of our accounts payable accounts? This is dialogue. Verbal dialogue, it could also be written dialogue in emails, depending on how the business team communicates. But putting those questions on the table for discussion lead to a decision that is going to look at the balance sheet. And a learning is going to begin to happen when you then make decisions and see what the effect is. So this financial communication, very, very important to have with the business owner and the management team. Second step in balance sheet business management is financial forecasting and comparison. Third handout, everyone, and want to draw your attention to this third handout. And the third handout shows on very top profit and loss accounts, and then below the 5 balance sheet core accounts. In this top section above the lines, many people are familiar with doing budgeting, they're familiar with doing forecasting, projecting, and you're looking the next 1, 2, 3 months, maybe longer ahead, and projecting what you think is going to happen in revenue, what you think is going to happen in costs, and what you think your profit is going to be. This is a very, very important exercise to do in managing the business going forward. With balance sheet business management, we take it a step further. And let's go below the black line on your handout. We encourage and we work with our clients to forecast the balances, the end of month balances in the cash account, the accounts receivable account, inventory, accounts payable, operating, and accounts payable inventory. This is an extension of the budgeting process that occurs on the profit and loss side. This is very, very important. So you have your forecast. Then when you close your month, you look at, okay, we forecasted $50,000 in our cash account at the end of the month. Our cash account came in at $40,000. The actual. Why? You begin to ask those questions. Why didn't we meet forecast? And we begin to isolate on those variables that you were not able to achieve your forecast. Or maybe you projected cash at $50,000 and it came in at $100,000. The question is, why? Asking, and we take that in each of these accounts, and that's our comparison part of this exercise. Because the comparison section, and you see the variance, you say, what happened? What happened financially in our company to give us the actual, and this is what we forecasted. And a tremendous amount of learning starts to occur month by month by month, and you become better at forecasting. And that is exciting, very exciting in balance sheet business management. Everyone tracking with that? Any questions from our group here at Minnetonka? No questions? All right, great. Any questions from other offices, Will?
Not so far.
All right. No questions yet. All right, you keep tracking on that, Will.
All right.
We'll be back to you. Okay, the last step of balance sheet business management is a step that we call conversion. And conversion is an exciting step. And conversion is where you are tracking what is happening in your company. You are tracking how rapidly are we converting inventory to accounts receivable. And that's a number. How rapidly are we converting our accounts receivable to cash? That's a number. How rapidly are we taking our cash and paying our accounts payable? And that's a number. This is conversion. You're converting inventory to accounts receivable to cash, paying your bills. And knowledge of this conversion is very, very, it's exciting, it's important, and tracking this along with the forecasting, along with the comparison, this is going to be very significant for the management team. And you are going to be able to look at challenges and look at opportunities with knowledge of your conversion, and you're going to be able to step through those decisions and take your company to the next level. And this is a very, very, all the steps are important, but this conversion, it's awesome. That's all I can say about it, right? You see, Dan, awesome?
Yeah.
All right. Yeah, but this is, in business challenges, in business opportunities, this is really what we were talking about when we begin to work with our clients. So, I think we're ready to go to the next PowerPoint, Will?
Right.
Okay. So we're going to, our last handout, everybody got the last handout? Everyone have a pen? A pen with you, and we're going to go to the last handout. And this, I'm going to draw up here on the rolling whiteboard what balance sheet business management looks like. How does this look on the camera, Will? Look good? So everyone's got your chart. I'm going to draw the chart here on the whiteboard. And we've got dollars here on the vertical axis. And we have months and years on the horizontal. We're going to draw some lines, and I'd like you to draw the lines as I draw the lines. The first line we're going to draw, and we're going to just say this is a company that's growing, their sales are growing, and we're going to draw the revenue line. We're just going to draw that as going up and to the right like that. Okay, everybody draw that and put an R on it for revenue. The next line we're going to draw just slightly below it, and this relates to our profit and loss activity. We're just going to draw a line for, we're going to call that P, we're going to call that profit. And revenue minus costs equals profit. So we're just drawing a line with this particular tracking closely, kind of a slope-wise to revenue. So this could be an example. Next, we're going to plot that accounts receivable balance, one of our core accounts. And we're going to say, with revenue growing, that the accounts receivable balance is going to be a flatter line than these other lines because as companies grow, your accounts receivable balance does not necessarily have to grow at the same rate as sales. And this gets back to conversion, converting accounts receivable to cash. So I'm just going to draw that line, somewhat a little bit flatter. The next line I'm going to draw, just so we have a little more space on our board here. I want to move revenue up here a little bit higher. The next line that we're going to draw is inventory. And as revenue grows, we also believe that level of inventory does not need to grow at the same percentage as revenue growth, because you are converting that inventory to accounts receivable to sales at a rapid rate. And so your actual balance in inventory doesn't need to spike. It might spike occasionally, maybe you're a seasonal business, but overall could be very, very flat as you go through your growth. So we have mark that inventory, accounts receivable. The next line we'll plot accounts payable. And accounts payable, I think, can be very flat. And because you're converting, you're paying off your accounts payable on operating and inventory, and accounts payable balances, I don't believe, have to increase at the same rate as sales. Otherwise, in an earlier stage, would have. So this is what, as we plot our core accounts and our revenue and our profit look like. And so, got a couple more lines to draw. And this is what's going to demonstrate balance sheet business management. And we're going to draw the cash line. Notice the steepness of that slope of cash. This line is pretty steep, but it's possible that this line demonstrates balance sheet business management. The slope of the cash increase is steeper than the slope of the balance sheet accounts. Financial strength when you're building your cash balance. You're turning your inventory to accounts receivable to cash. Cash is balance sheet strength. I hope everyone agrees with that. But this is very, very significant. Building up of this cash, this asset, your balance sheet. This is financial strength. This is the objective of balance sheet business management. I'm going to draw a second line here, maybe not as steep a slope, but this is E for equity. And we mentioned what's the accounts that are in the equity section of the balance sheet. We think that line is distinctly steeper as well, as balance sheet business management is executed. And these two lines, if you get involved with a banking relationship, you get involved with investors. Dale, you mentioned getting involved in a potential acquisition. These are the two lines that you want to look at. You look at these other lines, they're important, but these two lines, the slope of these lines, seeing this and seeing how this company has managed their cash, seeing how the profits. This is balance sheet business management, and this is balance sheet strength. Because if you've got this balance sheet strength, you have got a very, very distinct, clear advantage over your competition. And so if we go back to balance sheet business management, what balance sheet business management is about, it's about the objective to strengthen your balance sheet, to financially strengthen your balance sheet by financially communicating, doing financial forecasting and comparison, calculating and learning about your conversion. And these are the tools that you are going to be able to, we mentioned 2018 and business challenges and opportunities. You're doing that, you're talking, you're doing your financials. You are going to have an advantage when these challenges and opportunities come along. And you are going to be able to see those opportunities and challenges much, much earlier. Yeah, because you know what is happening in your company. And with that knowledge, that is business success. And that is what balance sheet business management is about. Mentally to the next level. Any questions on balance sheet business management? Will, any coming in from the field? Okay,
I got a comment.
Okay, comment, yes.
Good classroom discussion.
Yes.
But most entrepreneurs are so stretched, they don't pay their bills till they absolutely have to.
Yes.
This is why they need you.
Yes.
And they are collecting their cash as quickly as they can, and it's never enough. So you got the gap.
Yes.
You've got to analyze your liquidity, but they don't pay their bills until they and governments kill you on the fees and everything. So that's why they need you.
Yes. Yeah, the comment here was about what is happening actually in a business ownership situation, cash balance building, the ability to pay off bills, and how large a challenge that is. It's a day-to-day, this balance sheet business management is a daily approach to decision making. And it's in front of you every single day because you are working entrepreneur as that member of that executive team to build that balance sheet strength and see those lines go up and to the right. Yes.
So I know a lot of businesses use QuickBooks.
Yes.
Does QuickBooks then automatically produce balance sheets for those users? Is it
Yeah.
populated at the end of the day?
Yes, QuickBooks is really the main software for small to mid-sized businesses. And yes, QuickBooks does present that balance sheet, those balances, really at any time, but closing end of month is when the business ownership looks at those typically. And QuickBooks isn't really good at producing forward reports. And this is where you've got to look at the information that QuickBooks gives you and maybe a history of month-end balances to begin to do your forecasting comparison. So QuickBooks has, a good base of reports, but we take it beyond that. We have to see the future to manage the present. So, yes, sir.
Are more people using cloud versus desktop? And do you do the inputting?
Yes. Yeah, the question was about QuickBooks. Is more people using the cloud versus using desktop? And do we do the inputting? Yes, we do the inputting. We find that to be very, very valuable because we learn what's actually happening with the financial transactions. Dan, what are you seeing in online versus desktop? I know what we like.
Well, I like both.
Yep.
But I like online because you can be anywhere at any time. However, I think the bigger most users are desktop.
Yes.
Because first of all, you pay for it once. You don't have to pay monthly, and you get updates for free, so. If you're starting out, I would say, start with the desktop, get used to it, and if you start growing like that, then consider going online. That's what I see out there, I don't know.
Yeah, QuickBooks and Intuit is a big push now on online QuickBooks, and there's an advantage to that for many types of businesses. But as the business grows, the number of accounts, the complexity of the business, we really like the desktop.
Online
the
isn't
desktop.
quite so good for inventory.
Right.
If you're inventory intensive,
Yep.
they're limited on how much inventory you can handle.
Yes.
So the difference between desktop and cloud, what does that mean? What is
A
that?
desktop resides on the computer in your office. That is where the
Right.
software is.
Okay.
You can also access it remotely on maybe a server somewhere, but the software resides here. The online, that resides in the cloud. You access it through the internet. And
You
so,
can do it anywhere.
yeah.
Right,
Work on
you
it
just
anywhere
look
in
like
the
use a
world.
fob or something too? How is it authorized, like, so they know that it's not somebody else trying to hack into it?
Well, it's password protected. Yeah.
Once you're signed in, it's a password and you're in.
Yeah.
Okay.
So you can access it on multiple devices. Yeah. Yeah.
So
It's a
online
multiple
version-
device.
Online versions, isn't there an aggregation feature where you don't have to manually input, where if, depending on your bank,
Yes.
a lot of that activity can just feed directly
Yes.
into,
Yes.
so that would be the online version, though, is that correct?
Online, yes, online version definitely integrates with some online applications with your banking and credit cards as well that's available to the desktop. And we look at that and we analyze whether that's the best thing because there could be errors and things that happen in that transmission. But yes, that is available on the online. And so,
Just
Yes.
a quick comment.
yes,
My comment is that for small business owners, online. I use the desktop for a good number of years.
Yes.
Every year they're gonna charge you more. Every year you need to update the desktop, go
Yes.
online. Yes, you pay monthly, but
Yes.
it's,
yes.
headaches go away. I hate those.
How much is it monthly?
I don't know,
$37.
$30.
Yeah.
It's
Yeah, the
not-
That's a
The
big-
question, the comment here was about the advantage of QuickBooks Online and the cost and the versatility for small businesses. And I definitely agree with that. But you've just got to really look at your business, how you are doing your accounting, where you want to access, when you want to access, the complexity. And if you need assistance with making that assessment, we can help you with that. But one variable on this is the desktop version and the online version. There's a different look and feel to those. And the desktop is our preference. Would you say, Dad? Because we've worked on desktop and we're very familiar with it. And we're getting more familiar with online, but there's totally different look and feel. QuickBooks Online, would you say, Juan? You mentioned?
I mean, I use desktop for a good number of years. You
Yes.
go online and you go, why didn't I do this?
Yes.
In my book
Yeah.
online.
Yes.
So it's just a matter of taste, basically. It's a
Yeah.
matter of what you're
Yeah.
comfortable with.
Yes, yes. Matt, yeah, getting comfortable and once you, but it's just a different look and feel. If you've been on desktop for a long time, then you go on online and go, whoa. But you know it has to be there and you just got to learn how to enter the information and get the reports that are
What I'm
meaningful to
seeing
you.
outside of the United States is it's almost all going online, and they're ahead of the US to a large degree, and there's a lot of other softwares
Yes,
that beyond Intuit that is online also.
yes.
So
Yeah, the comment here was about international use of software, and yes, that, and the other countries are going more online than the United States, and that could very well be. I haven't tracked it myself, but definitely seeing that.
Yeah, I just have one comment about the graph. And it's
Yes.
just, I know you have a good answer for it, but if you go out and borrow money to get your business going, you're gonna have short and long-term debt. And that uses up cash.
Yes.
So your cash may flatten out, but just as importantly, your debt could go down fast if you're doing the right thing with your business.
Yes.
Cash kind of runs with the debt.
Yes. Yeah, a comment from Dan Murphy, a PEK consultant, was about if you need to acquire as a new business some short-term debt to finance your operations, how do you balance debt service versus your cash balance? And that's a very important variable to plan that out, to forecast on your forecasting template how you're going to manage that debt is another, I would say, another core account that you want to add to your 5 core accounts. Yes, Dale?
I've got a question for you, Paul. Well, it's actually a 2-part question.
Okay.
So the first, this is the world that you live in and you spend your weeks in this space. So the conversations that you have,
Sounds like he doesn't want
maybe I don't know the terms, but you say most solo entrepreneurs or even micro businesses, do they pretty much live in a cash in, cash out kind of world? So to that, would this approach to accounting and managing the business, I don't know if many solo entrepreneurs or micro businesses really look at their business as a sellable asset in the future. Could this type of approach to accounting make them more sellable or make their business more sellable at that time or come?
Absolutely. Question was about the balance sheet management approach and if this could make the balance sheet and make the business more attractive to a potential investor.
Exit strategy.
Exit strategy.
We've all got an exit strategy, hopefully.
Oh, absolutely. Because this investor or person that may acquire your company, they're going to look at the history of your company and they are going to plot these lines on a graph and they're going to see what's been happening in your business. And they're going to want to see the reports from your QuickBooks that show your month-to-month sales, that show your month-to-month balances. And so having control of this, critical to what you're talking about, to people that are looking at your company for acquiring, possibly investing. Absolutely. Yes, thank you. Great question. Yes.
Without disclosing confidentiality, have you got a win or two you could tell us about? We went in and turned something around. Can you think of an example?
I can think of an example that I would love to share with everyone, and I don't think it violates any confidentiality. We have a client, Softies PJs, that we work with here in the Eden Prairie area. They were at a trade show last summer, and the people from Steals and Deals, Good Morning America, came into their booth. A representative from Oprah came into their booth and said, we would like to feature your product on the GMA television show, the View television show, and the Oprah people said, we'd like your product to be one of Oprah's favorite things. That was out of the blue when Tim Murphy, the president, went to this trade show. He came back and we said, we're going to work and we're going to make this happen. That was a business opportunity that we've been working on, and we were able to make those decisions that yes, because they said you've got to have so many units that you can guarantee are going to be available on the day of those sales. And this was GMA, I think, was October 14th. The View was in the middle of November. Tim got on the phone with our supplier in China. Can you do it? He said yes. And we executed, and all I can say is it was a very good year for Softies PJ. And it was crazy. It was a crazy year, but they had this snuggler. It was this snuggler product. If you'd like to go online, softiespjs.com, and it was this snugglers product that just sold tremendously well at all those events and sold through their regular website. So it was very, very exciting, and it was awesome. So thank you for that. The question was on.
Wasn't a planned question.
It was not. It was just. Did I have an example of a client that we worked with that had a great story, and I would say that's a great story. So thank you for that question. Okay, we're coming up, Lisa, but want to just wrap up here. our last page is if you'd like to know more about balance sheet business management. I think we're out of the questions, right? Any questions from the field?
No.
No questions.
That's it.
But thank you for the great questions. This was amazing. To know more about balance sheet business management, I've got some opportunities for you. The opportunity is to be on our email list that we send out monthly. And that email list, if you'd like to be on it, send an email to accounting@pekaccounting.com, and we'll get your name on that list, and you'll receive our monthly emails. Second way to learn more about balance sheet business management is to schedule a meeting with myself or Dan Murphy, one of our PEK consultants. And we'd love to meet with you, spend a couple hours with you at your office or at an office center's location. We'd be very, very happy to do that. If you'd like to schedule that meeting, guess where to send that email? Send that email to accounting@pekaccounting.com. Also, at the very first slide, can we go back to the first slide, Will?
Sure.
First slide, if anyone would like to get this PowerPoint, it's only about a 5-slide PowerPoint. I can send it to you, and the email address, accounting@pekaccounting.com.
We have it memorized.
Right. One more opportunity that I want to share with everyone, and we are very excited about this, but PEK is hosting a Super Bowl breakfast at the Bell Plaza building Friday morning, February 2nd from 8 o'clock to 10 o'clock. That's where our office centers, France is located in that building. We'd love for you to come to our Super Bowl event. We're going to celebrate Super Bowl 52. We're going to talk maybe a little bit about balance sheet business management, but we've got some great presenters with us today. John Helene, any little tease for that, John?
How to build a sales playbook.
Yeah. How to build a sales playbook. About a year and a half ago, John and his partner Mark told me about this sales playbook approach, and I love football. I love the playbook. So it's gonna be playbook, Super Bowl sales playbook. But we're gonna celebrate this Minnesota's Super Bowl 52, because talk about challenges and opportunities. Minnesota jumped on this, and we are taking it to the bank, and we're going to have some fun. So if you'd like to attend that Super Bowl breakfast, RSVP to accounting@pekaccounting.com.
What's the date again? What's the date?
The date is Friday morning, February 2nd from 8 to 10 a.m.
Who's gonna win?
Who's going to win the game?
Mhm.
Well,
The Vikings.
we're going to talk about that. That's going to be part of our presentation. We're going to have some fun with that. But we'd love to see you there if you can make it. And I just want to thank you so much for everybody for being here in our room. Thank you to Lisa for this, and office centers, and Lori and the team for giving us this opportunity. And thank you to Will for manning our projector, fielding all those questions that came in, the PowerPoint. And so we've still probably got a little bit of food. We've got some cookies.
And are we gonna do a drawing?
Oh, we got a drawing.
We have a drawing.
We've got a drawing. Do we have our
I
fishbowl?
have the whole fishbowl.
Okay.
Fishbowl is here, so we have to do a
Do-
drum roll.
Now, this is for the people here, right?
This
People
is
here?
for the people
Yep.
here, and then at the other centers, we're gonna do something we'll do a drawing with the other centers.
When will that
It'll-
drawing be?
it'll-
Later today. So there'll be 2 prizes, one to someone here,
Does everybody
one to
have
the
the card
survey, people that fill out the survey at the other centers. And
Put
our
it in,
prize,
Reggie.
we wanted to reveal our prize,
Oh, I don't
so you
know.
know what you're gonna get.
Okay.
Is we have a bag of Caribou Old North coffee.
Yay.
What could be better than that,
That's
right?
right. All right, so everybody drum roll.
All right. Let's let one of our,
Let's let Margie.
Margie's gonna take it, the one-handed.
Okay. I'll get 2 of them.
And our winner today is Trevor Malone,
Oh,
AXA Advisors.
Trevor.
Congratulations. Thank you, Trevor. So we've got your Bold North coffee and here's an NFL game bag.
So did everybody get a lot of golden nuggets from our passionate expert here? I think that we know that you love your balance sheet business management program, and everybody should. Is that awesome opportunity to follow up and learn more with you? 20th sounds great. Next, Philip Wright's in the house today. He's going to be our next speaker for PowerLunch on the 22nd of February. Philip with Broker Bank Securities is going to be speaking to us about small business investment banking. And you'll be sharing educational information on what the investment bank is and how it will help small businesses. Correct, Philip?
That's correct, ma'am.
Do you have anything to add to that?
No, I think it'll be dovetail on this nicely.
Good.
Is that
Perfect.
going to be here, Philip?
It will be.
Okay, Philip's right here and he's here, so we're going to be back
Asking questions.
February 22nd?
22nd at noon in Minnetonka.
Okay, Minnetonka.
Also,
Back-to-back Minnetonka.
and as usual, we're raising the roof around here, kicking off the year with lots of free events at office centers. We have the February 1st at Park. That's really gotten to be awesome. 40, 50 people there. It's a morning thing. Everybody gets an opportunity to share their little elevator speech. But more, it's about the bonding and little continental breakfast. And it's always an awesome group. We do a ton of woohooing. Tuesday, February 6th, Ben Tice is going to be back as our Google expert. He's going to be hosting another free training session on intro to social media advertising. If you haven't experienced Ben, it's a must. It's a must see. Also, Thursday the 15th, we now are alternating. We always did the second Tuesday and the third Thursday. We did the wine uncorked at France, and we did the Thirsty Thursday at Minnetonka. We're now alternating months. So this month, last month it was uncorked, and many of you were there. And this month it's going to be here, Thirsty Thursday on the 16th or on the 15th. And then there's two events on the 22nd. It's going to be Philip here at Minnetonka. And if you want to stop at Park Office Center first and see Juan, the cookie man, that was in here earlier, he's going to be rolling out a new CRM program that he and Gail Noakes are doing. So anyway, we have lots of fun, lots of free events. Check out our website. Come register for any of them. We'd love to see your smiling faces at our places. We also want to tell you that Woodbury is going to be opening on March 1st. So that's a big woo-woo, and our owner and team are working very hard at that. I bet Will's involved in that one too.
March 1st.
And doing the woohooing. All right. Well, everybody, thanks so much for being here, and you did an awesome job. Thanks for all the golden
Thank you so
nuggets.
much.
And everybody is here for questions, and everybody have a great day. And another woohoo.
There's some cookie bags if you want to take a cookie to go. Plenty of cookies, I think.